Good evening, students. I am CA Hitesh Kumar San, a qualified chartered accountant and currently working as an assistant manager in a private company. I take income tax classes for CMA Inter and CA Inter students, and I do doubt solving sessions for people in my vicinity who seek doubts from me. And I am going to take you through the income tax subject for the inter level. And to begin with, we'll understand the basics concept of income tax, which is chapter 1 of the income tax module of the ICAI. So this chapter will cover the components of income tax law, steps for computation of total income and tax liability, the important definitions, and basis of charge and rates of taxes. So we will be looking into each and every bifurcation in a detailed manner going forward one by one. Okay. So introduction. What is the meaning of tax? Let us begin by understanding the meaning of tax. You may feel that I am reading the text, but I'll give you context wherever necessary. So a taxation by definition as per the Constitution of India would mean anything that includes the imposition of any tax or impost, whether general, local, or special, and tax shall be constituted accordingly. So here they are not giving you a clear definition. Here they are just simply telling you it is an imposition of any tax or impost, be it general or local level, or it is special case, and the tax shall be constituted accordingly given the context. So if the government is levying something, and in that context, any levy will be constituted as a tax. Simple. So tax can be considered to be the cost of living in a society. What do they mean by tax as are considered to be the cost of living in a society? Generally, India is a developing country, and the government needs revenue in the form of taxes to fulfill the needs of the poor, for the upliftment of the poor, for the welfare of the country, for the building of the infrastructure, for other expenditures that are necessary for uplifting the country. Okay. So tax is something which is levied by government in one form or another from directly from you, is known as tax. Now tax can take two forms, whether it one is direct tax and one other one is indirect tax. So broadly, we can make a statement saying that everybody in India is paying indirect taxes, but there are few who are paying direct taxes. So this statement I'll tell you as we progress the class. I'll tell you why this statement holds good. So basically, I'll first give you a understanding of what is direct tax and what is an indirect tax. A direct tax is a tax which is levied on the individual who is paying it directly. For example, they have given that direct tax includes income tax. So income tax is a levy on a person who is earning any income. That's all. So if you are earning an income, you will pay income tax. If you are not earning income, you need not pay any income tax. As simple as that. But whereas indirect taxes, they are levied on everybody. They are levied on everybody in the form of goods and services tax and the customs duty. We'll come to the customs duty part sometime later, but everybody must be familiar and must be having some idea about the goods and services tax. Goods and services tax is nothing but a VAT, value added tax on all the goods and services which are supplied in the country. So if you are somebody who is going to a salon, if you are going to some supermarket, you are knowingly or unknowingly ending up paying taxes in the form of GST. So next time when you go to some store or do some transaction with somebody outside, for all the expenses you incur, you end up paying GST. And if you don't know, you just look into the invoice, there will be a component mentioned as goods and services tax. It will be CGST and SGST. So what I'm trying to say is everybody in India is paying indirect taxes knowingly or unknowingly, but not everybody in India is paying direct taxes. Okay. So now we are going to understand why the taxes are levied. The reason for levy of taxes is that they constitute the basic source of revenue. Like I already mentioned, the government needs money to fund defense, fund the provision of education, healthcare, infrastructure, and facilities like roads and dams. Okay, so there is a larger section of the population in India which is largely dependent on the welfare schemes provided by the government, and the government has to um, arrange money or arrange funds to facilitate these services or these welfare schemes for the betterment of the poor or for the basic development of infrastructure. So this mobilization of money is the purpose why the taxes are levied and taxes are paid by the citizens of India. Okay, but government cannot randomly come and levy taxes to you, saying that tomorrow if Mr. XYZ is walking on the road and tomorrow they cannot come and tell you, hey, you are walking on this road, yesterday only we have put the road, so you have to pay tax. No, not like that. That does not happen on a very random manner. So the government derives its power from the constitution, and the constitution of India by way of article 265 lays down that no tax shall be levied or collected except by the authority of law. Authority of the law meaning, if there is an act constituted, if there is an act in place which governs the collection of tax or which governs the levy of tax, then only such tax has to be collected. Otherwise you cannot collect any tax. Okay, so as simple as that. The Indian democracy is functioning on the basis of Constitution of India, which is a broad framework which defines the various rules and regulations that every citizen has to follow. And this Constitution of India gives the government of India a power to levy taxes, and the income tax is levied under the entry 82 of the union list. That is, the entry 82 of the union list falls in the 7th schedule of article 246 of the constitution. So broadly, the article 246 is one article which says that the legislature, the parliament and the state legislatures have the authority to make laws and collect taxes. And there are three lists, which are union list, state list and concurrent list. Union list is the subject matter of the central government. So the only the parliament has the exclusive power to make laws and and regulate them. Secondly comes the state list. This state list contains the subjects on which only the respective state government has the power to make law and nobody else can intervene. And the concurrent list comes where both the parliament and state legislatures have the power to make law and decide matters. So here this is the residuary list in which both the union and state will come together and take actions. But this is largely the framework. We don't need to go inside this. Now broadly what we need to understand is we are studying income tax and who draws the power from where. Okay, so income tax is a matter of union list, which is the parliament, the central government has the power, and this union list is containing lot of entries, and out of which entry number 82 is the subject which is governing the income tax. So the central government derives power from the union list of article 246 of the constitution of India to levy income tax. As simple as that. Okay, so next we'll move to the overview of income tax law. So any like already we have discussed that no tax shall be levied or collected except for the authority of law. Authority of law, like I already told, there has to be a law in place that governs, regulates, and monitors the functioning of that regulation or that law itself. Okay, so what is the framework of income tax? What is the broad components of income tax? This is what we are going to see in the overview of income tax law in India. So the income tax law of India contains five components, which is the Basic Income Tax Act 1961, which is the base act which was dated year 1961. The income tax law is the base act which is dated 1961, and there are lots of amendments done every year to this act, and these amendments are moved through the annual finance act. So everybody must be now very carefully listening to all the budgets. Our honorable finance minister Mrs. Nirmala Sitharaman comes with the red book, and they are doing a lot of discussion in the parliament, doing a lot of announcement in the parliament. All these announcement, all these amendments come in the form of annual finance act. This Finance Act contains the amendments, contains the updations which requires in the income tax in the current context, and these changes are given effect in the Income Tax Act. Okay, so the components of income tax law includes Income Tax Act, the Annual Finance Act, and then comes the income tax rules. See, act is a broad structure of what is to be done, how it is to be done. Okay, what is the scope of the act, what are the regulations of the act. That is what the broadly an income tax act would contain. But to execute that act, to bring it on the ground level, to do the paperwork, there are lot of minute details which we have to look into. There has to be a proper process which has to be taught, and those processes, those forms, those guidelines come in the form of income tax rules. So income tax rules is a part of income tax act. So it goes hand in hand. If you are supposed to read income tax act, you are bound to read income tax rules, because knowing the law is one part, but knowing the law plus knowing to execute it is the second part. So income tax rules comes in the into play for the execution of the act. Okay. And then the fourth component is the circular and notification. Circulars and notifications are issued by the department in case there is any clarification required on a subject which, for which there are multiple views possible, or which is little ambiguous in different contexts. Okay, I'll give you an example for this, but for now you should understand that any act which is written foreseeing the future or thinking of multiple possibilities will always have a shortcome, or will always have a subject which is overlooked, or will always have something which has been missed out. In such case, there is high chance that there will creep in lot of conflicts, there will creep in lot of inconsistencies. In such cases, department needs to address these issues, and these issues are addressed by way of circulars. Okay. And circulars are generally binding on the department side and not on the assessee side. I'll tell you why is it. And fourth is the notification. The second component in the fourth framework is the notifications. Notifications are nothing but they are a kind of small statement. They are kind of small, you must by the term notification itself reads defines itself that notification is a push message on a short term basis to give an effect to something which is not implemented yet. For example, there is a change in rate, there is a change in rate, or there is change in some provision but not the entire act, then it can be pushed through a notification. There is a provision which has already been brought into amendment, but the effect has not been given, meaning every year annual finance act they bring in lot of amendments, but not all amendments get implemented on the very first day of April. Okay, there are few amendments which are dated, and these amendments have to be given effect. So for which the department will issue notifications saying that so and so provision will come into effect on so and so day. There is a change in such provisions from this effect from this day. Like this, there are a lot of short messages which the government has to communicate, and these communications come in the form of notifications. So this is the broad framework of income tax act which is already written. So income tax act is already written and defined. Annual finance act is an every year updation which the parliament committee sits and does the amendments. Income tax rule is already defined and written. Circulars and notifications are timely communication which are issued by the department. But legal decision of courts are something out of the way. Okay, these are not written by the constitution, but rather it is given by the fourth pillar of democracy. Okay, so the honorable courts, the high courts, the supreme courts, there are a lot of subjects which go to the courts for the go to the judiciary for the final outcome. There are a lot of cases which see no conclusion, and then ultimately they have to go to the courts for justice. Okay, in such cases there are a lot of references which can be drawn from a case law. Okay, so not everything, every act has a limitation. Every person who is writing an act, everybody who is sitting in a committee of writing an act have their own limitation. They cannot provide for extreme conditions. They can write a generic act, they can provide for the possibilities which are evident, but they cannot provide for extreme possibility which is very rare. So in such cases, when the conflict arises and public goes to the court, goes to the judiciary gives a judgment, and these judgment can be used as a reference, and they are binding on the citizens of India, be it the department revenue side or be it on the citizen side. Okay, so these are the large components of income tax act broadly, which are income tax act, income tax rules, the annual finance act, the circular and notification, and finally the legal decisions of court. Okay, the income tax act is the level is dated 1961 and the levy of income tax is governed by the Income Tax Act. In this book, we shall briefly refer to the act as act. This act as an act. Okay. This act extends to the whole of India. So there has been no confusion whatsoever. Income tax of Act of India 1961 extends to the whole of India from Kashmir to Kanyakumari, from Gujarat, Maharashtra to west this eastern part of the country. So all the states, all the territories of India are very well governed by the income tax of India 1961. This act came into force on 1st April 1962 and this contains section 1 to 298. There are 298 section and 15 schedules. Okay. This is a broad layout of the income tax in India. Now I'll tell you what is a Finance Act. So, like we have already discussed, every year the Finance Minister of Government of India introduces finance bill in the Parliament's budget session. When the bill is passed by both the Houses of Parliament and gets the assent of President, it becomes the Finance Act. Okay, so every year we cannot sit and do amendments in the Income Tax Act itself. So there has to be some changes which has to be incorporated in a parallel manner, and this subject is taken care by the Finance Act. So every year, Finance Act not only contains amendments about the Income Tax Act or the Goods and Services Tax Act. Okay, Finance Act is a document which contains all the amendments on the major acts which are existing and which are applicable in India. Okay, so any change which has to be given effect from every financial year, or there has to be an updation without tweaking the act in the basic act in the first place, the Finance Act will give lot of amendments every year. Okay, and this Finance Act has to be passed by both the Houses of Parliament and the President has to give their assent. Only then it becomes a Finance Act. Okay, amendments are made every year to the Income Tax Act 1961 and other law by the Finance Act. Like I know just now I completed that every year there has to be some amendments to give the law a relevance to the context in the current context, and such relevant amendments are done through the Finance Act. Okay, and this Finance Act contains four parts which specify the rates of tax. One is part 1, which is the part 1 of the first schedule. The Finance Act contains four parts. The part 1 of first schedule specify the rates of taxes applicable for the current assessment year. Current assessments year. So here there comes a definition. There comes a technical term of income tax which we will study in subsequent discussion. But for now, you should understand current assessment year is the year in which you are offering your income to tax. Okay. So first part 1 of the first schedule will contain the rates of taxes applicable for the current assessment year. Okay. Accordingly, part 1 of the first schedule of the finance number 2 specify the rate of the financial year 23-24. This is they are giving the example, meaning the Finance Act of 2024 will specify the rates of tax for the financial year 23-24, which mean assessment year 24-25. Okay, and the part 2 specified the rates at which tax is deductible at source for the current financial year. This is nothing but TDS. Okay, now for time being, you should understand there is something known as TDS in Income Tax Act, and the rates of such TDS is given in the part 2 of first schedule of the Finance Act. Okay, and there is part 3. Part 3 gives the rates for calculating income tax, for deducting tax from income chargeable under salaries, and computation of advance tax for the financial year 24-25, and the assessee exercises the option to shift out of default tax regime under 115 BAC 1A. Simple. You just ignore. Part 3 gives you the tax rate for the next financial year. That's all. Okay, like we studied that part 1 will give you the tax rate applicable for the current financial year. Part 3 will give you the tax rate applicable for the next financial year. Okay, and part 4 gives the rules for computing net agriculture income. So there are four components of a Finance Act. The first schedule of the Finance Act, which will specify the rates for various types of transactions. That's all. So this is Finance Act for you. We have seen Income Tax Act, Income Tax Finance Act, and now we go to Income Tax rules. The income tax rule is nothing but the administration body or executive body. So anything which is written in the act has to be given effect, has to be exercised, has to be made um, accessible or has to be enabled for the citizens to comply with. So this enabling happens by way of rules, by way of various forms, by way of various formulas which are required to comply with the basic income tax act. Okay, so the income tax rule 1962 is the administration of direct tax, which is looked after by the Central Board of Direct Taxes. Okay, Central Board of Direct Taxes is the executive body or administration body of the Ministry of Finance, and this does the job of regulating the income tax rules. Okay, the CBDT is empowered to make rules for carrying out the purpose of the act, and for the proper administration of the income tax act, the CBDT frames rules from time to time. Even your form ITR 1 2 3 4 5 6 7, these are forms which are not given in the act, but rather these are forms which are regularly updated from time to time, and these are done by the powers of income tax rules. The CBDT comes out with various forms. I've just given you the forms for income tax return, but there are various other forms which are necessary for complying with this huge act. And these forms and these formulas, these regulations come in the form of income tax rules, and these are given by the CBDT, the Central Board of Direct Taxes, which is a functioning of Ministry of Finance. Okay, and then we come to the circulars and notices. Circulars are issued by the CBDT from time to time, okay, to deal with certain specific problems and to clarify doubts regarding the scope and meaning of certain provisions of act. Like I already mentioned, and when we discuss the components of income tax act, that the act can only provide for what is the possibility. They cannot factor the extreme situation, and they cannot write everything in the act itself. In such cases, when you are writing something generic, when the act is so generic and the population is so huge and there are so many transactions happening in India every day, so there is bound for lot of confusion, there is bound the lot of ambiguity, lot of conflicts are bound to arise, and in this situation the department has to address them. Otherwise the smooth effective functioning of income tax act becomes very difficult. To keep these things functioning properly, the department has to give clarification in the form of circulars from time to time and based on the needs. Okay, when there is a lack of clarity or there is an ambiguity on a subject for a larger audience, then obviously the department has to listen to them and give circulars. Okay, so for example, in the recent finance act, the government through the finance act had removed indexation for the long term capital gain. Okay, so what they did was they just brought down the tax rate of long term capital gain and short term capital gain as 12.5%, which was different on the previous financial year. Okay, now this amendment triggered lot of problem at for various assessees, because anybody who was having a long term capital asset was facing a confusion if both our tax are going to be both the gains, which is short term and long term, going to be taxed at the same rate, then whether the long term capital gain person will get indexation benefit or not. And this benefit was done away. Nobody was the very clear about it, and the government had to step in and they issued a circular saying that no, indexation benefit is not available for long term capital gain, and they, after a lot of pressure, they had to bring it back for the real estate asset, the asset which is immovable property. Okay, so this was done by way of a circular. Okay, and like I already mentioned, the department is bound by the circular. While such circular are not binding on the assessees, they can take advantage of a beneficial circular. So circulars of their internal communication, which can be used by the assessee for their benefit, but it is not binding on them. Okay, and then comes notification. Notifications are issued by the central government to give effect to the provisions of the act. The CBDT is also empowered to make and amend rules for the purpose of the act by issue of notifications which are binding both on department. So you can give effect to an act, you can give effect to a specific provision by way of through issuing a notification, or you can also inform the public that you have made lot of changes to the rules, and such changes can be communicated to the public via notification. Okay, So circulars and notifications are communications only, but circular is largely addressing the department side of people, while notification is common for all. So everybody is bound by notification, while only the department is bound by the circulars. Okay, this is the fourth component which we have seen, and the fifth component comes legal decision of the court. So case laws refer to decision given by courts. Simply, the study of case law is an important and unavoidable part of study of income tax law, because it is not possible for parliament to conceive and provide for all possible issues that may arise in the implementation of any act, and hence the judiciary will hear the disputes between the assessee and the department and give decisions on various issues. Okay, like we already discussed this subject, that an act, the person who is writing an act cannot provide for all the possible issues which might crop up in the future, okay, without having a context that what is going to be relevant in future. So what they can write is only a generic act, but writing a generic act will not apply to all situation, and there is a possibility that a lot of people who are very much compliant and who are very much sincere and about complying with the act will have confusion whether to what to comply and what not to comply, whether what view to take, what view not to take. Okay, and in such cases there are a lot of disputes and there are a lot of ambiguity, and which leads to the assessee going to the judiciary seeking for a clarity, sir, like this is the case, what is to be done, and the judiciary issues judgments. Those judgments are an essential part of the income tax act, because like these lot of confusions will arise, and every confusion cannot go to the court. So if there is a large section of people who are facing the same confusion, and if one person has gone to the court and got a judgment, the remaining people of the same issue can use this judgment in their favor. So this will save the time of judiciary, because tomorrow everybody cannot go to the court for a same subject, because the court has other jobs to do. They cannot sit on the same subject and clarify everybody saying that, sir, this is the issue we have addressed this way. This is the same issue we have addressed in the other case. You can take reference. The court will not do that. For that purpose only, when a case has gone, when a confusion has got a clarity from the honorable courts, that clarity in the form of judgment can be referred and used in the similar confusion which is at a different assessees level. Okay, so legal decision of courts are also an important component of income tax act, which cannot be ignored and which is binding on everybody. Okay, so to summarize everything, now broadly we have seen what is income, the meaning of tax. Okay, where does the government draw the power to levy tax, and who can levy tax, who can levy what tax is defined very clearly in the constitution. Okay, and then we have seen the overview of income tax act, which is the components of income tax act. So there are totally five components of income tax act, which is the income tax act, the annual finance act, income tax rules, notification circulars, and legal decisions of the courts. Okay, and for now I hope you have understood everything, and in case you think that I am little fast or I'm slow or I'm not giving clarity, you can definitely reach out and tell me that what is the constructive thing which I can add or minus, so that the lecture becomes an efficient and more crisp and conveying to the point. Okay, so I'll conclude my lecture with this, and I'm looking forward for your feedback. Thank you.